Welcome to Monday's update. Can you believe it? January is nearly over. Today is January 29th and we're nearly done with the first month of the year. Time flies, it's crazy. I hope you've all had a wonderful time trading and you spent some time with your loved ones and you're having a good January. I hope February brings lots and lots of interesting and exciting profitable price action for all of us. Okay? All right, well, let's dive straight into it. The current fair price of Bitcoin stands at 42,636. And over the weekend, well, there's been some local bearish action over the weekend. And as far as our last stream, last Friday, Thursday/Friday, we were around this region. So we've had some minor downtrend and we've moved down about 3%. And this is something we were prepared for. This is something we were expecting. And this is something we're still currently observing. So today, what we're going to be looking at is the bigger picture. We're going to be planning our week and we're going to be seeing what the market has in store for us. As I always say, preparation is everything. So make sure before you place a trade, you've dissected, your points, your POIs, and you're ready to pull that trigger. So without any further ado, I think a good starting point is to look at some of the local trades and some of the recent trades I've been in. There's two trades I'm going to go over. One I took and the other I did not take because I believe it happened on Sunday, and I don't usually trade on weekends because I like to take time and relax. So let's start with looking at the first trade. Well, the first trade was riding the internal range breakout. It was riding that internal range breakout and I was looking to get in on the pullback. Now, why did I enter this trade? First of all, where is this trade? So let's find the trade first. Okay, so the trade I'm referring to is this trade over here. And as I say, it was an internal range breakout pullback setup. So why was this an internal range? Well, this was part of the 4-hour range. All of this was bound within this 4-hour range we've been playing in. And it was the internal range. This is the internal range. It was a breakout of the internal range and the pullback off of that break. So we're going to get rid of Friday's location just to look at how I entered this trade. Why did I enter the trade? What were the clues that price action left behind? Well, first of all, you have to observe the impressive extension on this range break. So look at all that strength. Those bull bars, are very strong and very long. And so this suggests that there is a lot of buying momentum, okay? But as we all know, what goes up must surely come down. So a retracement was inevitable. You also have to pay attention to, the rejection wick, that was on a 4-hour high. That married up with that over there. That was our 4-hour high point. So I can just mark that out for you. And it will look something like that. And that was the rejection wick over there. I'm going to drag this down. So imagine this is our 4-hour, okay? And this is our 4-hour price action. So we had a wick up here, all right? That wick's the 4-hour. And what does that wick suggest? That wick suggests, it signifies that we have a weak low in play. So that was one reason to be cautious. I couldn't enter that trade and not manage it properly because that could have rotated all the way down, all right? Now, what else did I need to pay attention to? I needed to pay attention to this 10-minute demand over here. And we also had a 12-minute demand below that. I was thinking, well, that retracement leg could come down here, or it could come all the way down for the 12-minute. Now, I'm not sure which one it was, so I needed to look for my confirmation. What were my confirmations? As I always say, I tend to use an indicator called market cipher, and market cipher gives me really amazing signals. And if we look at the level we're interested in, what I'm looking for is a bullish divergence. What is a bullish divergence? A bullish divergence is as you go towards your level, price will go down as momentum goes up. So let's see if we can observe that. We can see that as price came to our level, we were observing what's known as a bullish divergence. So we can see prices making lower lows, and we can see that our momentum wave is starting to make a high high. Our money flow is at the peak, but we should start to see, an increasing gradient, which is suggestion that there is money going into the asset and we're potentially going to get a bounce at this level. So let's see if we get that bounce. All right, so we got that bounce over here. And I was able to write that up for about, let's have a quick look. I was able to write it up to POC, which gave me around, I would say about just over a 3% move. Okay. Now this is a very easy one. And if you don't have market cipher, that's not the end of the world. You can also use simple market structure. So what was market structure doing? So if we trace our market structure on the way down, we've got a market structure doing this. We can take that as the high. We have a change in structure, a break in structure, a retest for potential upward action. So that break would have taken place here. As soon as you've seen that break, you should have been saying, right, I need to look for that retracement to enter that trade. And fair enough, you might not have got the most, clinical entry. Now you may have entered here. However, that's still quite a juicy region. That's still quite a juicy trade. So there you have it. You could have used market cipher, or you could have used simple market structure. So we can see price, price played around for a bit and then it started to mark up. Okay. Now at this point, we can see, I'm going to get rid of this for now. We can see that price starts to leave its footprint. Price leaves that 4-minute demand, it also 24-minute demand, it also leaves another 24-minute demand. So these are potential reaction points that we have to mark in as price goes ahead. So that was that first trade. Now remember, towards the end of the week, we were saying that this 4-hour POC is a very, very key region. It's a very key area that we're looking to get a reaction from. All right, so we marked that out, and lo and behold, we do get a reaction exactly from that region. All right, we pierce through, we get a reaction from that region. However, the very fact that we have some bull trending candles or bull trending bars, however you want to say it, going fully into that zone, that's not the most bearish thing. Now we may get a reaction, but we may also break it. That's not the most bearish thing. All right, so just bear that in mind. That's something I bore in mind as I traded this region. So what did price continue to do? Well, at this point, I was actually looking to enter this trade. All right, why didn't I enter this trade? I didn't enter this trade because I didn't really get my confirmation. Even though we got a reaction off this point, I didn't get the confirmation I was looking for. Now, what was I looking for? I was looking for at least a market structure change, and not just any market structure change, a market structure change that gave me decent risk to reward. Now, this is what my 15-minute looks like. This is what the 15-minute looks like. And as you can see, in terms of this structure, I can't really enter a trade on the 15-minute until this level is broken. Okay, so until price marks down, retraces, and breaks that level. All right. In terms of a lower time frame, let's see on the 10-minute, exactly the same. The 10-minute structure is exactly the same. So I couldn't really enter that trade on the 10-minute. On the 5-minute, same thing. I couldn't enter that trade on a 5-minute. Okay. On the 3-minute, now we're starting to get to dangerous territory. On the 3-minute, let's see, could I have entered that trade on the 3-minute? Well, perhaps on the 3-minute, we do have a different structure point. We have another low that's been printed. I guess on the 3-minute, this would have been a low that you would be waiting to break. All right, but still not yet a break. Okay, so on the 3-minute, we would have to wait for that to be broken. Now on the 1-minute, again, dangerous territory, that the 1-minute. Perhaps on the 1-minute, we could have got a play in this zone. On the 1-minute, if I trace it up, actually, yeah. If we were playing 1-minute structure, we could have entered a trade right around there, all right? But, how many people will actually look at the 1-minute and enter on a 1-minute? It's quite a risky play because you could break here, but you could still continue up. So actually, that was the trade I did not enter. Why didn't I enter? It was because my break in market structure meant that my risk, my risk tolerance was going to be quite high. Because see, we still haven't got a break. We're still playing around in that region, and only now do we get that break. Okay, and if I was to enter that trade, let's say I enter that trade right around here for the 3-minute break, actually it won't be a long, would it? It'll be a short. If I enter that, another long, well done. If I enter that right around here, not a fib, I think that's the one. If I enter that right around here, we're looking at a stop loss of 1.3 or 1.43%. Okay, now that's not the end of the world. If if and only if you're looking to really drive this down, all the way down here and further down here. Now that looks like a decent trade, but I was just looking to scalp this, and because of that, that was not a good risk to reward. So I sat out of that one, right? And I didn't enter that trade, okay? Now trade number 2 that took place was a trade that I'm sure a lot of you would have entered. Now I don't usually trade on weekends because I like to relax and chill and take some time away from the screen. I don't really trade on weekends. However, I'm sure for those of you who are trading on the weekend, you probably would have seen this. And what am I talking about? Well, let's see. So we reject off that 4-hour POC and we are trending down. But as we're trending down, we're aware of a few things. What are we aware of? We're aware that this 10-minute demand, right, that we've bounced off has created another 10-minute demand, which we could potentially bounce off, all right? I'm going to get rid of this. So we're looking out for that region and we're saying, okay, cool. If I get a market structure change in that region, I'm game. I'm ready for a trade. And lo and behold, what do we get? So as we can see, as price marks down, we wick into that 10-minute demand, we push up, and I'm pretty sure that is what comes next to follow. And where is the divergence? We can see as price comes down, printing lower lows, our momentum wave is going up and our money flow has an increasing gradient. Okay, so look, that's what happens. So obviously price breaks structure and it comes back with that retracement. So if you missed it on market cipher, it gives those following market structure another entry criteria to follow. So you could have entered there. All right, so I'm not gonna sit here and tell you I got into that one. I didn't get into that one because I think that happened on I think it was on a Sunday, but on a Sunday I was definitely not on the charts. So that's it for the second trade. So you didn't just need market cipher there. Even if you didn't have market cipher, you could have entered based on market structure. So those are the 2 opportunities I've come across so far. Now they're not the only opportunity. So if you haven't entered those trades, that's fine. There's going to be more and more trades for you to enter. All right. So now let's delve into the charts and let's see what's going on. As it is Monday is a good day of the week to get a really global perspective. I quite like that. I'm going to get rid of it. It's a good day of the week to get a global perspective. So what are we going to look at? We're going to see where is Bitcoin as far as the global time frame is looking. Where is Bitcoin as far as the local time frames, and also we're going to then zoom into the local structure and see what our plans are for this week. So first thing we must note is that on the monthly, we are on a monthly downtrend. How are we in a monthly downtrend? We've got an up, a low, a up, we wick the top, we rotate down, we break structure downwards, and we're printing that, lower high. Now that lower high, which I'm sure a lot of people are aware of, is from the major price action from last bull cycle. That lower high is the expectation of order flow. We don't expect price to do this. We don't expect price to go up straight to the all-time highs and break it. That would be quite weird market structure. So we expect price to react perhaps around here, or it can come as high as over there and still mark down. All right. Granted, if price was to get past the 786, which is that light blue, it's unlikely that is going to take place. Perhaps we get that move up, but that is unlikely. Now, why are we seeing a reaction here? Why are we seeing a key reaction here on the weekly? We're seeing a key reaction here. First of all, this is our golden ratio level. This is our golden ratio level from the high of the bull run to the low of the bear market. That's coming around here, and we've just about wicked it. And also, if we look at our volume profile, for the last bull cycle, we can see that the POC, the point of control, which is a high volume node, which is where lots and lots of traders have entered the market inside, that's coming out around here, and that's exactly where we seem to have gotten that reaction from. So on a monthly, we are looking, for that retracement leg, that lower high, to facilitate, the flush downwards. Now, I hate to be super bearish, but if we are to get that flush downwards, and if we are not to get any reaction here for that up leg, we may potentially be looking at lower Bitcoin prices. But I'm just saying that's the monthly, and the monthly is going to take a long time to come to fruition. So don't be alarmed. Now on the weekly, let's see what's going on. So I'm going to draw the weekly price action. Perhaps I start around here. We've got something that looks like this. We break structure, we come up here, we play around here, we break structure. So on a weekly, this is where we are at the moment. And on the weekly, I'm going to make that a different color. Let's make that orange. So this is what your weekly market structure looks like for now. So we are on a weekly uptrend. So what do we expect on a weekly? On a weekly, we expect perhaps a retracement. It could happen here, could happen here, could happen here. And we could, get some more upside, perhaps, because we are on a weekly uptrend. However, if we zoom in further, let's say we look at the 3-day. On the 3-day, we can see that, the bullish trend is beginning to weaken. We're starting to see, some signs that perhaps we may be looking for a turnaround. On the daily as well, we're looking at signs that suggest that perhaps we may be beginning to have the turnaround. Why is that? Because if we zoom into the 3-day structure, we can see that we've had our first break, our first bearish break. We can start perhaps from here. We can see that we've had, let's take that as a low, a high, and a low here. We can see, let's make that a different color, let's make that pink. We can see then on the 3-day that we've had our first, bearish break. And we can also see that on the daily as well. All right, so on the daily, we can see that bearish break. However, this break is not very convincing. All right, I would be expecting perhaps a higher flush down, a more convincing break, if that lower high is to take place. Well, this break is not as convincing. So it may not be a decisive break, I would say. But just be aware, we're starting to see that weakening in strength, which means we're overdue a reaction on the weekly. We're overdue a change in direction on the 3-day and on a daily. That's going to facilitate that change in market structure on the weekly as well. All right. Well, we can see on the weekly, we have a long way to go before that market structure changes. And in the case that we are going to get a retracement on the weekly and the bullish action continues, where is that likely to happen? Well, I would say we're likely to test, our last demand range. So this region, we're likely to get a reaction here for some more potential move to the upside. So we'll make that orange again. On the weekly, this may be what's about to play out. And this would be a juicy position to enter a nice long trade. A nice long trade that you can hold for a minute. You can hold that for a while, okay? Trades like that, you can hold for a while. But let's see what happens. We're still a long way away. And if it does, perhaps it's going to come in, later in the year, okay? All right. So now, where does that leave us? Well, it leaves us in a position where we are expecting a retracement leg, and we know that that retracement leg could happen anytime soon. Don't get me wrong. I'm not saying that the price couldn't still peak up before we get that retracement leg. What I am saying is we're due a retracement. So on a more local scale, what do we have and what is the price action saying? So on a more local scale, what I'm going to do is get rid of all of this first of all, and we're going to zoom in to see what's happening more locally. So let's start off by going onto the 4-hour. As you know, Bitcoin has been printing, a series of higher highs and higher lows all the way from down here. It's not had any change in market structure. It's just been up. And we've had our first change in market structure around here. I actually have the 4-hour drawn out. So let's see if I can find that. Yeah, exactly. There we have it. So the green represents an uptrend and the red represents the start of a downtrend. Now I'm just going to drag that down over here. So we can see that we've had 4-hour uptrend and then we had, a downtrend. Okay. Now, what we can also see here is I want you to pay attention to this, is we had a potential, power of 3 play over here where we had our range. We had our range. Okay. We had our manipulation, and we had our expansion downwards. We had our expansion downwards. So if we put those in different colors, just so we can see it clearly, let's put this in blue if it lets me. We'll put that in blue. All right. Perhaps this, we're gonna put that in, let's put that in purple. And that, we're gonna put this in, let's put that in that weird looking orange. All right. So bearing in mind, we've had something like this on a 4 hour. And what I can also see is, could we potentially be getting the same thing, but on a higher or larger scale? So if I get rid of this, perhaps we've got another PO3 or a PO3 within a PO3 that looks like this. So we have our range, okay? Then we have our manipulation, followed by this expansion that may be to come, if it lets me again, okay? Followed by an expansion. So perhaps this one, we make this green, and let's make this something nice and bright. Let's go with the, oh, that's not very bright. Actually, we'll increase it opacity. There we go. All right, it's a bit much, but you get the idea. So we've had our range and we've had our manipulation, and could we be getting that juice upward? And is that going to take us, you know, to perhaps the 786 before we get that retracement? That's just something, you know, to bear in mind. So now that we have seen that and we've got the possibility of that, that may justify why on the 4 hour, we have had a 4 hour bullish break-in structure after this bearish break. Because what we would expect, you know, off of this range, as soon as we broke the range, we may expect, you know, a downward flush down. We've got so many reasons to come down. We've got all these liquidity over here. We've got all these fair value gaps over here. The only real thing we've got holding price up is this 12-hour, you know, demand. Well, why haven't we flushed down? Well, yes, perhaps we could just be coming up for a nice retracement before we go down to something that looks like this. So we have the range, you know, we retest the range and then we flush down. Or we could, you know, be going up for some further bullish price action. Hence why, you know, we've had this 4 hour break-in structure, as we can see. So let's, you know, zoom in. Now that we've discussed that, let's zoom in to see, you know, what's happened or what's happening as far as our local structure, and what do our trades look like in terms of the rest of the week. So above us, Bitcoin, we've obviously got, you know, right at a peak in the mountain, we've got this hour supply, we've got this 45-minute supply that's confident with a POC, we've got a 10-minute supply, and we have got this 4 hour supply, which we just reacted from slightly over the weekend. But, you know, that's what we have above us. What do we have below us? Below us, we had this 2 hour demand that we reacted from. We have this 12-hour demand that we have not yet reacted from. We have this 4 hour demand that we have not yet reacted from, okay? So price, you know, could be looking to go up. In the case it is looking to go up, where would our next trade be? Well, for me, my next trade will actually be looking at this 4 hour level, this next level. I'll be looking to see what price does as we test that level. You know, I'll also be looking, if in the case we break through that level, of course, we may have a retracement, but we may have this 10-minute supply zone facilitate that retracement. So we could have something like that on the 4 hour. So our 4 hour candle is green, so I'm going to make that green and I'm going to drag that over. So we could have something like this. So in terms of my next trade, I'm looking for a short at the actual high, or I'm looking for a short, you know, at that next supply zone. I'm going to leave out the 45-minute zone for now because I think we're quite far away. So that's short number 1 and short number 2. Okay. In terms of our local levels, let's see if we've got anything here. So if we go on a 24 minutes, wow, we've had quite, this is quite a juicy move we're seeing at the moment. But I can't quite see anything locally because we are next to this supply zone. All right. Well, in the case that we're looking for our long trades, all right, for our long trades, we'll be looking at some retracements, that take us perhaps down here to the 12-minute supply, sorry, the 12-minute demand or the 10-minute demand. Okay, so let's set some alerts. So this is where I'm going to put alert number 1, just to see what price does as we get there. This is where I'm going to put alert number 2 to see what price does as we get there. Okay, but notice as price is pumping up, what do we need to be doing? We need to be evaluating the price action to see, are there any zones that we could get a reaction from to, ride that wave? Are there any zones like that? And we can have a quick look. Let's see, look at a 2-hour. Well, we've kind of have a 2-hour zone here, but it's unconfirmed. It's not yet confirmed. Okay, no, it is confirmed because we've just broken that structure. So there we have it. We've got a 2-hour zone there that we can mark out. Okay, and we could get something. We can pump up, come down for some more further action, and we'll be looking to enter along, around that level. All right, if we were to get that retracement. All right, other than that, let's see if there is anything else that I can see in terms of our local price action. Yes, I guess we have this 12-minute zone within that 2-hour zone. That's something to watch out for. And we've got a 10-minute zone within that zone. That's something to watch out for. But in terms of long, it looks like we've just broken this structure. So I would wait to see what price does. Definitely look at this level to see a reaction, see whether we are going to get a reaction over there. So that's just something to be aware of. What is the scenario in the case that we do mark down? Well, in the case that we're treating this as one big range and we're saying, well, prices come out, it's going to retrace for some more downward action. What's the case for that? Well, the case for that is very simple. We have all this liquidity over here. We've got all these fair value gaps over here, okay? And we are due a retracement on the weekly, all right? So bear in mind, that's what I'm looking at the moment for the week. So let's plan this and let's tidy this up so that, you have something to work with and something, to use as far as visually. All right, so we're looking for long or short number 1. I'm looking for a short at this level. So we're going to see what price does as we get to this level. All right. We're looking to see what price does as we get to the supply above it. Okay, so something like that. Those would be my next 2 short trades. As far as my long trades, we're looking, in the case that price retraces, we're looking to see if we get a reaction from this zone. Yeah, so we're looking to see if we get a reaction from that zone. All right, if we get that reaction from that zone, that could take us up to break structure, or it could take us up, to that, 10-minute zone. But we'll definitely keep an eye on that zone. And that's it for me at the moment in the immediate short term. That's it. Of course, I'm looking at these zones below, but that's it for me in the immediate short term. Now, the important thing, what I always say, and I will continually say, is, planning your trade is just one piece of the puzzle. But the other piece is actually having a very clear-cut confirmation criteria. What am I looking for before I enter my trade? What is going to be the reason to pull that trigger or press that buy button in whatever app you're using or whatever broker you're using? And that is, for me, very simple. As I approach my zone, let's say this is my zone. As I approach my zone and I'm looking for a short, I am looking, as I approach that level, of clear market structure change. As we're printing higher highs and higher lows, I'm looking for price to come into that level okay? But as it comes into that level, I'm looking for it to print, a lower low followed by a lower high. And then I'm looking to enter on that leg, okay? That's my entry criteria, okay? Without a break-in structure, I'm not looking to enter that trade. And that break-in structure ideally should be on the 5 minute or above. Occasionally on the 3 minutes, very rarely on the 1 minute, but you should be looking at something on the 5 minute or above. Added confirmation, we're talking about market cipher. As price is going up, are we getting momentum wave going down, and are we getting our money flow going down? Make sure you're getting your confirmations that you need. If you're using RSI, make sure your RSI marries up at that level. And if you're only using moving averages, make sure your confirmations are sound at that level. Without your confirmation, there's no reason to enter. Just wait. All right. So there we have it. Just be careful. Make sure you're looking for your change in market structure, your bearish divergences, and just make sure you're practicing really sound risk management. So thanks for watching. If you found the video useful, don't forget to hit that bell icon to stay up to date for the next video, and subscribe so we can get this content to as many people as possible. See you tomorrow.